Are you interested in becoming a real estate millionaire? Well, in this video, I'm going to show you how owning just one piece of property can make you a millionaire over time. So stay tuned. I'm not just going to preach about how great it is to own real estate. I'm going to actually show you the numbers behind it. I'm going to use actual numbers that history will prove to be accurate numbers, and how owning one piece of property can change your net worth drastically. So come with me, join as I go through this quick little exercise. I'm Matt the Mortgage Guy. Thanks for joining. Like, comment, subscribe, do all the things you do for YouTube if you found value in this video. So as a mortgage broker, I talk to people day in and day out about home ownership, and I understand right now home ownership feels a little bit out of reach. With affordability, it might feel tough for you to own a home. You might be thinking, should I wait? Should I maybe just rent instead of purchase? Because purchasing feels like a stretch. Maybe your mortgage payment tied to the house you're going to buy is $3,200 and you could rent for $3,000. I'll get to more of that and how over time that's definitely one's going to overtake the other. But before I do, let me show you the chart, because I think that people can relate to numbers and pictures, and when you actually see it, it'll make sense. In this example, I'm going to use a $500,000 purchase, and I'm going to assume a 10% down payment. So this person would be financing or borrowing $450,000 from the bank at 6.5% interest rate. I'm not even assuming that they can get a lower interest rate or they'll ever be able to refinance it. I'm just going to use 6.5% as interest rate. I'm also going to use the assumption that real estate is going to appreciate on average 4% per year. Now, where I'm at in California, over the last 40 years, real estate has appreciated on average 6.9%. These numbers would look way better if I use 6.9%, but I'm going to be conservative. I'm going to use 4%. Just, if things over the next 30 or 40 years are slower and appreciation isn't as high as it's been in the past. So maybe just 4%, but you can look back over time, and even over the worst periods, if you take a long enough time horizon, you're going to get a 4+% average. So let's jump into the actual numbers. Like I said, you're buying this home for $500,000 and you're borrowing $450,000 at 6.5%, because there's two lines on this chart. One is how much the home is worth. The other is how much you owe on the home. And you've probably heard this in the past. There's a couple different magic things about owning real estate, whether you're living in it or whether you're renting it out. A couple of those pieces of magic is it appreciates over time. And if you hold it over time, you won't look to any 30-year period where it was worth less 30 years later than when you bought it. So it's going to appreciate over time. That's the purple line going up. And then if you have debt on it, if you've leveraged the bank's money to help you buy it, over time as you make payments, what you owe to the bank is going to go down. So if I'm looking at this and I've got a 30-year time horizon, I can look at year 10, and that's $740,000 or something. I don't know what the exact figure is, but I'm guesstimating on what it's worth, and you owe $400,000. So since you bought the property at 500, it's appreciated about $250,000 in the first decade of home ownership, and you've paid down, call it $60,000. This is probably about $390, if I were to guess. If you never got a chance to refinance and lower the rate, you just had a 6.5% interest rate and you paid down $60,000 over the first decade. Now, I want to give people who are going to give the counter argument some credit here, or I'll at least mention it, right? Maybe you can rent the same house that this $3,200 mortgage is attached to for $2,800. And I'm sure a lot of people will say, you can rent it for $2,800. So I'm going to take the other $400. I'm going to invest it as a homeowner. You're going to have to replace the water heater. You're going to have this maintenance and that. And I'm going to invest these dollars as I go. A major argument I want to make, and I'll pull this chart back up in a minute, is that the forced savings that happens on this chart, where it grows in value over time and what you owe goes down over time, As a homeowner, without doing a refinance, that money is stuck. It's a forced savings account. Whereas if left to their own devices, I promise you, because I talk to people every single day and I talk to them about their finances, I talk to them about a lot of stuff. They're renting for $2,800. They decided not to buy, and that mortgage would have been $3,200. If you told them just invest that extra $400 and pretend like you're paying a $3,200 mortgage and do that for the next decade, nobody will do that. Nobody. And so opportunity cost or whatever you want to call it, I don't buy it because it just doesn't happen. The second thing is I haven't pulled up a chart for how much rent increases, but if the rent today is $2,800 and that same house is got a $3,200 mortgage attached to it, I can bet with a relative degree of certainty that 5, 7 years, whatever the time horizon is, that rent is going to eclipse the mortgage payment. The mortgage payment is going to stay fixed. You've got a fixed rate debt on there, and that rent payment after a decade is going to be $3,400. After 2 decades is going to be $3,900. 30 years from now, that same house will rent for $4,700. It's why when you meet somebody who's lived in a house for a long time, you're like, holy smokes, your mortgage payment is $790 and this place rents for $2,500. Well, over time and appreciation and rent appreciation, this person had a 30-year fixed rate mortgage and they bought the house for $85,000. And every state's different, but in California, you actually keep that tax basis and it's only allowed to incrementally increase every year. So you've actually got a lower tax basis too. So all of these things just point to the power of owning a piece of real estate and holding it over time. So I'm going to go back to this because I promised you become a millionaire. The home's going to be worth about $1 million in 17 or 18 years, but you're still going to owe. If I look at this chart, you still owe 280,000, 300,000. So it's probably not until, call it year 22, where it's worth 1.2 and you owe less than 200. So you're actually net worth of $1 million in this one piece of real estate. And as much as some people will look at this and think that 20 years is a long time, it flies by. As a guy who, still thinks he's 21 and woke up today being 44, 20 years goes by really, really fast. And while we're on the subject of being young, imagine if you did this when you were 21, when you were 25. And maybe it's a duplex. Maybe you rent one side and you live in the other. That 20 years flies by and that $1 million in net worth is almost forced upon you. You didn't have to set up an automatic payment to pay into a brokerage account and to save $400 a month or whatever it would take to build up that in an investment account if you chose to be a renter. And this is why all of the statistics that are out there where the average net worth of a homeowner is 40x that of a renter, it's because of this forced appreciation. It's really, I'm sorry, forced savings. The forced savings inside of the appreciation of your home. The home goes up in value. What you owe on the mortgage goes down. Now you could amplify this. You could buy one house and after 5, 7, 10 years, move out of it and rent it. It's still going up in value. What you owe on it is still going down while the renter is paying the payment. And then you're doing that again on a primary residence. I've seen this so many times. And like my good buddy Mike Zuber and that whole community of one rental at a time preaches, a couple pieces of real estate can drastically change the trajectory of your family. Not just you, but maybe your kids and your grandkids. Because imagine if you were doing this times 2 or times 3 or times 4, and you had multiple pieces of real estate that were appreciating over time, that were getting paid down over time. And then you wake up 20 or 30 years later, you don't just have 1 million or 1.5, in this case, just one house. That the value after 3 decades is 1.6 plus million. And then you owe zero, it's paid off. So 1.6 million is one piece of real estate. Imagine if you did that times 4, right? And it's possible. I promise you, I talk to normal people every single day. And while it may sound hard, as I sit here today in 2025, rates are higher than you'd like. Affordability might feel like it's a little bit of a squeeze. I promise you it's possible because I've helped everyday people do it day in and day out. If we can help, I'd be happy to. Go to greatmortgagebroker.com, fill out the quick form. We're licensed in 48 states. We'd be happy to help. Greatmortgagebroker.com. Again, like, comment, subscribe, do all the YouTube stuff. Hopefully this video was helpful. Hopefully it inspired you. And hopefully I can help you along that journey. Talk to you soon. Bye-bye.